I run into, Keith, back to the nerdy finance stuff, is it's boring. Finances are boring. I know that, and I'm a finance nerd, which is why I try to make all my finance content with a beer so that it's not as boring. You know, it can be fun. It can be goofy. It doesn't have to be stiff and stale and boring. But it's super important that we get it right. Now, it's overwhelming. It's kind of I don't love building systems and processes. I kind of enjoy the chaos, which I know to scale a business, I need systems and processes, but I don't like to abide by them. I like to problem solve unique situations. I don't like to do the same thing over and over again. Now, that's me, which that makes me a weird finance person because most finance people are very like OCD, like I got to do it this way, and then I put this shoe on this way, and I always tie it this way, and I put this leg in this pant first, and then I do this.
Whoa, like, I didn't consider anything like that before.
So like it's like generally like finance people are very like systemy like that.
Yeah,
I'm just not. I kind of like me a little bit of chaos, but I'm very aware that you can't scale a business with chaos, right? Employees don't like chaos. I reserve the chaos and process dishonoring for me. And I tell employees that right when I hire them and train them, like, here's the deal. Here's our training system and process, and I need you guys to follow this. And I also need you to know that I am not going to follow that. If there's something here that's going to be broken, it's got to be run by me. I'm the rule breaker. I don't want you guys to break it. If you guys break it, that could get us all in trouble. I get to make the decision if we're going to break it. That's my job. But there are certain things where it's just like you can't violate it or it's going to cost you a lot of money. And it's not the system or the process necessarily, but it's just a way of operating. So you don't need I don't want to bore people to death with systems and processes here, but there is a way to set up your business, to set up how you interact with your business to make your life a hell of a lot easier. I call those plazas, 5 finance fundamentals. I think the last time I was on, we had like 12 different things, and I think these 5 are somewhere scattered in there. I don't know where they are in there. I have a notebook. That notebook isn't with me, but I think we ended up with 13 even. I think we had 12, and I maybe added a bonus one, a little baker's dozen in there. We'd have to go back and listen to that episode. But I still have that notebook with that page of like all the things we had written down. I'd have to go back and get it. It's somewhere back in Minnesota. But I have Platta's 5 finance fundamentals, and every time I get on a stage to talk, I do a little bit of the rant that I already did about what bookkeeping is and what it isn't, and why it's important to have a scorecard or scoreboard. And I don't care what the hell I'm talking about, I always talk about these 5 finance fundamentals for your Friday finances, because if you don't get these right, like, it's just hard to have a scoreboard in the first place. It's hard to know what's going on. So here we go. You ready?
Yeah.
5 of them. I might have to get up and look to get them in the right order, but I'm going to try to do it just by memory because I've presented enough times. The first of Platta's 5 finance fundamentals is that you have to separate business and personal. And you've gotten a lot better at that for yourself and for your businesses over the years. And this is something we talked about right away, which is like, in general, you can't have business stuff on personal and personal stuff on business, because how the hell are you going to read a scoreboard that's not accurate, right? It's not, if your personal stuff is mixed in with your business, how the hell are you going to know how the business is doing? Then it's just a hobby. But if it's your livelihood, if it's truly your business, then it sure as hell isn't a hobby. So you got to separate the business stuff from the personal stuff, or you won't have a clear picture. And again, back to the previous rant I went on, you signed up to play a business game, to play a math game. And so if you are the block of getting yourself good data because you're intermingling funds, you're causing yourself to not have a scoreboard to begin with. You signed up to play a math game and you're making it impossible to even play the game. You're handcuffing yourself. So if you're going to play this game, you should at least like not have your hands cuffed behind your back. You should use them. So number 1 of Platta's 5 finance fundamentals is make sure you have business and personal separated. Number 2 is If I'm presenting on stage with a beer, then I usually drop an F word when I do this one. But I won't. Maybe I will. I don't remember if I did last time, too, because I feel like I probably gave this one last time. But it's funnier when I have a picture up on the screen behind me, and I don't have the picture on the screen behind me. So I'll just lay it out like this. We're conditioned to be debt averse, meaning we pound our chest when we're like, I bought this truck with cash, right? Or I paid this thing with cash. And in a lot of cases in our business, there's nothing worse we could do. Debt, borrowing money, is a phenomenal tool in our business. Personally, in our personal life, debt doesn't do us any good. Now, as a business owner, it gets a little convoluted because we might borrow money personally to free money up to make business investments. But if you buy a truck cash in your business, let's say it's a $50,000 truck, all that you did was use up all the money that you needed for marketing and recruiting to actually grow your business, and you dumped it in a vehicle that sits in your driveway most of the time. And that vehicle doesn't make the business any money. You do. Or the customer does. Or the employee that would otherwise be driving that vehicle does. The vehicle itself is worth jack shit. The cash is the valuable thing. The investments are the people. The investments are the employees or the customers. The investment isn't the asset. The asset is useless without a customer and an employee. And so usually I reference Dave Ramsey in this because obviously Dave Ramsey is no debt, no debt, no debt, no debt. And personally, outside of my business, again, separate business and personal. Back to rule number 1. Personally, don't have debt. Your personal vehicle does not make you money, right? You going and getting groceries is not a form of an investment. Your business vehicle can make you money, and it's fine to have a loan for that because it should be out making you money every day. But if you don't have an employee and a customer for that vehicle to go do its thing, it doesn't make you any money. It just becomes a thing sitting in your driveway, costing you more money. So debt is fine if used correctly. Now, I'm not saying like go max out a bunch of credit cards. Credit card debt will alleviate the benefits of debt really quickly when you're dropping 20% interest on them. But even there, like, use a credit card in your business. Unless, I'll say, if you're one of those people that shouldn't have credit cards because you get out of control with free loans, maybe don't get a credit card. But for most of us, get a credit card, pay it down every month. Like, don't carry a balance on it, but it's like free money. It's a free 30, 45-day loan. It's a bunch of points. It's free money. Why wouldn't you take a free loan? Again, maybe it's not the right thing for you to do personally, but personally, your vehicle and your credit card and stuff doesn't generate a return because you're buying groceries. In your business, every time you're spending money on marketing stuff, on recruiting stuff, on an office person, on supplies, it's all geared towards making you money. And if you can't go do those things and get customers and employees, again, you're not going to make any money. It's okay to borrow money at one rate to go earn money at a higher rate. So throw out the Dave Ramsey in your business. Dave's awesome. He's not talking to small business owners that are making investments. Again, don't let debt get out of control, but don't pound on your chest when you bought a vehicle for cash. That's stupid. You missed the whole point. That's a bad investment. Marketing and recruiting is a way better investment than an asset. People make you money. Toys and equipment don't make you money unless you have the people for them. So that's number 2. Number 3 is kind of a weird one. Don't connect your CRM with your QuickBooks account. This is just a total nerdy bookkeeping one, but I'm so passionate about it that I include it in my 5 finance fundamentals. One of them is an accrual basis system, meaning it gauges when you have an obligation. One of them is a cash basis system, meaning it's looking at when money actually moves. Your CRM is accrual basis. Your CRM looks at when did you do the work for Mrs. Jones and when did you invoice it. When you invoice it, that's when you get, revenue in your CRM. Your QuickBooks is cash basis, meaning when did the money actually flow in. You hook your bank account up to your QuickBooks. Now, if you're doing over 25 million in revenue, you need to do what's called accrual basis accounting, like legally you need to. Then you need to go by your obligations, not just when the money flows. But if you're doing less than 25 million, there's probably a really good chance you should be doing cash basis bookkeeping. If you're a contractor and you're like building houses and your projects are, let's say, over $50,000 to $100,000, if you're doing remodeling and stuff like that, then accrual basis starts to make sense. But if you're doing projects under that amount, you should probably be cash basis. And you're just feeding transactions in from the bank account. When does money come in? When does money go out? Who you invoiced, when you invoice them is irrelevant. You're working, like the CRM manages all that. Who owes you money, what your accounts receivable is, all of that stuff is in Jobber, right? We don't need to put that in QuickBooks.
Jobber. Yeah.
You don't need
It's
to
all
put
in there.
You don't need that in QuickBooks.
Hey, you know what I just realized
real
real
stuff in
quick?
two places.
I never actually do this on the video version of the podcast. If you want to get a free trial of Jobber and a huge discount with my exclusive link, go to getjobber.com/Kalfas.
It's as easy as that.
Back to the show.
But like, there's no value in having the same data in two places. Why duplicate it? And especially don't like that was a rhetorical why duplicate it. But now I'm going to say, don't duplicate it, because it creates a shitload of work in your QuickBooks. And not that we're afraid of doing work, but why it doesn't add any value. So A, why create a bunch of work that doesn't add any value? B, if you don't know how to do it, which 98% of business owners I've run into don't know what to do when they dump all their CRM info into QuickBooks. It's not rocket science, but if you don't do it like at least daily or every other day, if you get behind on it, trying to figure out all the payments that pushed in from your CRM and which deposit they go with, that can be a freaking nightmare. Once that gets old, I was just helping a client she had 4 or 5 months of old deposits that she synced up her CRM. The CRM didn't tell her, and the CRM doesn't know what's going on in QuickBooks. The CRM didn't tell her, hey, by the way, when you sync this, here's what's going to happen, and here's all the things you're going to do. And so she did it wrong. She was using Blue Skies for bookkeeping at the time. Blue Skies tries to help, but it's not their thing, right? It's the CRM pushing the thing in, so then they're kind of in a weird spot. And so nothing good comes of it. It just creates a whole bunch of work. It creates a huge mess. I spent 5 hours with this gal over the last 3-4 weeks just trying to help like undo and redo everything. It's just such a waste of time. Guess how much value we added? 0. All of that work. I bet I spent 5 to 10 hours on it. Her and her husband, I bet, spent 10 to 20 hours on it. Thousands of dollars of our labor. Do you think her employees are better off? Do you think her customers are better off? No. It's just the most wasted work. So, not to say you can't sync a CRM with your QuickBooks. It just generally doesn't add value. It's a huge waste of time. Don't do it. If there's a way to avoid it, don't do it, because you don't want to deal with the repercussions, and I promise you it won't add any value that you can't get from those two systems having the information that they have. Everything that you have is in those two systems, and you can get the information from them. You don't need to smash it all together. Number 4. What is number 4? Oh, I've got number 4. You ready? There's 2 more, and I just got to decide what order I want to do them in to make them most impactful. Let's do it this way. Number 4 is you're generally going to want to be taxed as an S-Corp. I say generally because when you pay taxes as a business owner, your taxes are really personal. Our businesses don't pay taxes unless we're a C-Corp, which very, very, very few people are. And the ones that are, the couple that I've talked to, there's been like 1 or 2 where I'm like, oh, it makes sense for you. But generally it just doesn't make sense. Like that's for publicly traded companies normally. Our businesses do not pay taxes. The money flows from our business to us as a human being. We personally owe taxes. I'm talking income taxes. So I'll do like a quick crash course in how our taxes work. Generally, we set up an LLC. We're a business. We took Dan's advice of rule number 1 of separate business and personal. So we started an LLC. We have a separate bank account for that. And therefore, our LLC has its own set of books, and we keep personal and business stuff totally separate. We have separate bank accounts, separate credit cards. We're good to go. At the end of the year, that LLC makes, for sake of easy math, let's say that LLC makes $100,000 of income. That means, let's say it did $250,000 of revenue. We had $150,000 of labor and supplies and materials and marketing spend and all of our expenses. We have $100,000 left at the end of it. As a business owner, that $100,000, that doesn't get taxed at the business level. That $100,000 flows through to us, not physically. Like, it's not like we take the $100,000. We might leave it all in the business. The IRS doesn't give a shit either way. They're going to tax us on all $100,000 of it. And because we're a business owner, we pay the highly coveted self-employment tax penalty, which means we're the employer and we're the employee. And employers pay payroll taxes and employees pay payroll taxes. We're lucky enough to be both of them. So we get to pay both of them. And they're a little under 7.5%. And that phases out as the dollar amount gets bigger, but let's just call it 7.5%. So you're paying 7.5% as the employer and 7.5% as the employee. That's just you. This is before you even hire anybody. So out of that $100,000, that's 15%. That's $15,000. That's payroll taxes. That's not even your income taxes for making money. That's just you being an employee/employer of your business. So then you pay income taxes after that. Again, that $100,000, the IRS doesn't give a shit if you took it or not. It can all still be sitting in a business bank account. You still owe all the taxes on it. They don't care if you take it or not. So the reason to do that's if you're an LLC taxed as a sole proprietor, which is what you are if you just set up an LLC and then you leave it there. To be taxed as an S-Corp, you and or your CPA need to fill out Form 2553. You can go Google it right now. IRS Form 2553. I actually need to do this for my new bookkeeping business for the coming year. I didn't do it for 2023 because I just started this year, but I'll do it for 2024. Mm-hmm. When you're an S-Corp, and I'm going to clarify one thing which is you don't need to be an S-Corp. You just want to be taxed as an S-Corp. You could legally be an S-Corp. Then you just need a board of directors and you need to keep meeting minutes and a whole bunch of other stuff. But you can still be an LLC and just opt to be taxed as an S-Corp. Mm-hmm. So you get the best of both worlds. The reason why you want to be taxed as an S-Corp is it allows you to pay yourself a wage. So out of that $100,000, you can actually take a W-2 wage and your payroll taxes are limited to that wage. So instead of having to pay 15% payroll taxes on $100,000, you still have to pay 15% payroll taxes, but now you can pay it on $50,000 or whatever air quotes reasonable wage would be. And it's got to be reasonable, meaning roughly what you'd have to pay somebody else that would be doing that same job that you're doing in the company. And so it's a mechanism to save you a bunch of money on payroll taxes. So even in that simple mathematical case, if it was $100,000 of net income and your reasonable wage was $50,000, well, 15% of $50,000 is $7,500. I don't know. Do you want $7,500 or would you rather pay it to the government? Mm-hmm. I'll take it. I'll take $7,500. Now, if you're taxed as an S-Corp, now you have a separate tax return to file. As a business, the business now needs to file a tax return. So you're probably paying $1,000 to a CPA to do that. And if you didn't have a payroll system already set up, let's say you're using Gusto, that's what I use. It's $40 a month plus $6 per employee. So you're out $50 a month for a payroll system. So let's even round it up and say you're out $2,000 to get the tax return done and have a payroll system. You're still better off by $5,500. And it's literally just money that you didn't pay the IRS legally, which I think as small business owners, I haven't met a small business owner that's man, I would just love to pay more taxes. That sounds good. So if you can go save $5,000 in payroll taxes, hell yeah. go save it. So that's the reason to be taxed as an S corp. It's not you don't save any money on income taxes. You would actually end up paying a little more in income taxes because your income would be higher because you paid less in payroll taxes. But it's purely a payroll tax saving mechanism. And the cutoff, there's no cutoff, but I'd say where it starts to get interesting, where you should really be thinking about it, is if the net income in your business is like starting to hit 50,000-ish, like 30 to 50,000 range. If your net income, revenue minus all expenses, is approaching 50,000, you should be thinking about being taxed as an S corp. We're recording this in late October, so it'd be hard to do now, but you can do it for 2024, and the deadline to get it done is I think March 15th. So if you didn't do it for 2023, you sure as heck should be doing it for 2024. If you think, now you're kind of doing it proactively, right? If you think in 2024 you're going to have net income, somewhere in the $30,000 to $50,000 range or more, you should for sure be taxed as an S corp. The Platta's fifth finance fundamental is an offshoot of that. One of the things that I like about having clients that are taxed as an S corp, and this is just me being a nerdy finance CFO type of person, is if I'm going to look at your QuickBooks account and say, hey, Keith, here's how you're doing, and I look at it and you don't have a wage in there, your business is going to look really profitable because you're free. And I would argue you should be the most expensive person in your business. But if you don't take a paycheck and you just take distributions from your business bank account to your personal bank account, that doesn't hit your profit and loss statement. That just hits your balance sheet as equity going out the door. That's like when a big corporation pays a dividend. It's money going to the owner. That's not money going to the employees. And I would argue for most small business owners, they're definitely an employee in their business. They're definitely doing work. And workers get paychecks. So part of the reason to be taxed as an S corp is to hit on my fifth bullet point, which I'll make here in a second. But when you take a wage, you become part of your profit and loss. And all of a sudden we can see what you really cost the business, which as you grow the business, then it gets really important that you know how much you cost, because you're probably going to have to hire somebody else to do your job. If you're a technician, you're going to hire somebody else to do that. Then you're going to become a salesperson. And eventually you're going to hire somebody else to do that. Then you're going to become a CEO and a COO. And if you're really good, you're going to hire somebody someday to do that, and you're going to be sitting on a beach drinking Mai Tais. I don't even know what the hell Mai Tai is, but it sounds good. Do you know what's in a Mai Tai?
I don't.
We'll look it up later. Sounds delicious, though. Or Busch Lights with me on the beach. So, point being is, you need to know how much you cost the business in order for you to replace yourself. And so many small, we're going to get into this when we have our purgatory discussion. So many people start growing the business and don't take a wage. They just take distributions. And then they think, oh man, I have this business making a shitload of money. I'm so profitable. And then they hire their first technician. And that technician gets the paycheck for going out and doing the work. And all of a sudden, there's no money left for the business owner. And there's this stark realization for the business owner of, oh shit, my business doesn't actually make money. It just made a wage. And now that guy gets the wage, and I'm the business owner, and there's no money left for me. Because now he's the one making the wage, and I got to make sure he has work to do, right? So I'm going to send him out to do the work, but the business doesn't actually make any money. It just makes a paycheck for one dude. I used to be that dude. I used to be the one getting the paycheck, and now
you're saying that's with the owner getting out of the field.
The owner's out of the field.
So he's not producing the work being done at double the speed now to make double the money to pay him and the employee.
Yep.
So when the quote-unquote owner-operator gets quote-unquote out of the field, that grand a week he used to pay himself now is going to...
It's going to the other dude now.
Is going to the other dude, and you're like, oh, shoot.
Yeah, that's all the money the business was making. It wasn't making a profit. It was making a wage for the technician. And now you're not the technician getting the wage, and there's no money left in the business.
Reasonably, if there is only one crew, it's going to be a little bit of money, but you'd make a little bit more money the more you grow. So how many crews or how many people until that owner would be making back the amount of money?
You're going to have to listen to the podcast on the purgatories of scaling. The point is, we'll get to that because there isn't a specific level. It keeps changing because there's ebbs and flows of that. There's different levels where you need to hire different people, and there's periods of great profit and periods of really shitty profit. And that's not just when you hire like the first 2 technicians, first 1 or 2. It keeps happening again and again and again the entire way through your business. There's peaks and valleys.
Mm-hmm. Because if there comes a point where you have to hire somebody really competent in the office, or like, or an operations manager, somebody to, boom, that $65,000 you're gonna have to pay them takes your super healthy profit business is stuck, because that's a purgatory of scaling.
Purgatory.
And now you got to make that higher, so then you got to grow your way through that.
Yep.
What was the 5th P again?
The 5th one is all of that. The point of that is you need to understand when you're the owner and when you're the operator. So often we define ourselves as like with a badge of honor of I'm an owner-operator. Those are 2 different things. Owners don't have jobs. Owners don't get paychecks. Do you own any stock, Keith?
Yes.
Stock market?
Yes.
What do you own?
Tesla, Apple.
All right, Tesla. When was who's the Tesla dude?
Elon.
When was the last time Elon called and was like, "Yo, Keith, I need you down at this"? He's never called you.
Mm-mm.
You've never showed up late to work for Tesla?
Mm-mm.
Have you ever gotten a paycheck from Tesla?
No.
Exactly, because you don't have a job there. You're just an owner. You own stock in Tesla. You're an owner. You don't. They've never called you to show up at the warehouse, to move a box, to wrench on this, because owners don't have jobs. Owners don't get paychecks. Owners are investors. They put capital to work in a business, and the business takes the capital and does businessy stuff with it. Now, we're all owners, generally, of the business that we operate. But we like smash being an owner together with being an operator. Day to day, we're just an operator. We're a technician. We're a salesperson. We're a general manager. We're a COO. We're a CEO, right? We're everything. As we scale the business, we slowly hire some of those roles out. We're still an owner, right? The owner gets the profit. But we're also doing a job. Us doing the job, we need to get paid for the job that we're doing. Because for us to build a scalable, profitable business, we need to make sure that our business can afford to pay somebody to do that job. If we build a business that literally can't afford to pay somebody to do that job and make the owner money, eventually we're going to hire somebody to do all the jobs. We might build, I've seen this happen before, might build a $3 million company. Sounds great, right? Well, not if you build it to just make enough money to pay everybody's wages and there's no money left for the owner. Because at $3 million, you might hire a CEO. Now what? Now there's no money left for you if you didn't build a profitable enough business that can make a profit and pay everybody's wages. So it's super important. And the reason why I stress right at the beginning, separate business and personal, this all kind of builds on itself. The reason to do the S-Corp thing is because you need to know what you cost the business, because someday you're going to hire somebody else to do your job. And you might take a different job in the company, but that's only going to happen for so long until you exit the company. Now, you can still own it even if you don't work in it, right? You own Tesla and you do not work in it, because working at a job and owning a business are 2 separate things. And our small business is no different. We can own it and we can have a job in it, and we usually do both for a period of time, but it's important that us as an operator gets a paycheck for doing that job. Us as an owner gets to decide what to do with the profit. But for us to be able to decide what to do for the profit, there needs to be some damn profit. So we need to build a business that can make a profit after it pays all the employees, all the supplies, all the marketing, all the recruiting, all the infrastructure, whatever it is. There also needs to be profit left so that someday we can be sitting on that beach drinking Busch Lights and the business is still sending us a dividend check once a quarter or whenever it does. So the 5th thing of Platta's 5 finance fundamentals is know when you're the owner and when you're an investor and when you're an operator. The owner and investor is just making investment decisions. Are you going to put more money into this business that you also operate? Or are you going to go buy a boat? Or are you going to go on vacation with your family? Or are you going to invest in another business? Right? Like I have Best Damn Bookkeeping, but I also am an investor in Higher Lead Chill. I don't have a job here. In Higher Lead Chill, I don't get a paycheck. I'm just an investor. I'm a mentor. I'm a coach. I don't get a paycheck. If we distribute money, I'd get some. But I don't show up to work there. I talk to Sean, see how he's doing, see how I can help. Over time, I probably need to check in with him less. At some point, he'll probably buy some shares in it and be an owner in it too. But I'm just an investor. I'm just owning Tesla stock. I'm a little closer to it, and I can influence it a little bit more. Best Damn Bookkeeping, I own 100% of, but I sure as hell have a job there. Right? I am the operator. I'm the owner and the operator. I'm not an owner-operator. I'm the owner and the operator.
So can you say the 5 real quick again? Just boom, 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 boom.
Boopity boop boop. Number 1, separate business and personal.
Mm-hmm.
Number 2, don't be afraid to use debt wisely. Debt in your personal life, debt in your business life are 2 totally different things. So in your business life, don't be afraid to use debt wisely. Number 3, for the love of God, don't sync your CRM with your QuickBooks. Number 4, what was number 4? Number 4 was you probably want to be taxed as an S corp. Sorry, I have a hard time like keeping my pinky down doing the 4th thing. I'm going to just do this.
Oh, yeah,
it's hard to do, isn't it?
Yeah.
Here.
You're
No, so
I can do it with this hand.
Yeah, I can do it with my
But
thumb.
I can't do it with my left hand. I can keep all my fingers open and my pinky totally down.
I can't.
But with
I'm
my
not
right
close.
hand, I cannot put my pinky all the way down, and it pulls my other.
Pulls your other one down.
That's crazy. All right, now what was number 5?
The things we learned. So number 4 was you probably want to be taxed as an S corp. That one, verify with your CPA because it gets into personal finance stuff too.
Mm-hmm.
And number 5 is kind of an offshoot of that, which is you need to know when you're an owner, know when you're an operator. Part of it is doing the S corp thing and taking a paycheck, so you know when you're operating the business and what it's worth, and also understanding that you're just an investor. You could invest in the business you run. You can also invest in any other business you want too.
One quick tip. Not a tip, I'm sorry. I have a friend who's got a tree service business, and that type of business requires most of the time, until it's like a totally different animal, the owner, who's the expert tree guy, to be there.
Oh, yeah, that one's an intense business.
Yeah, and it's a safety. It just So it's usually the owner-operator mindset permeates that business, and the whole goal of that is to get as much fucking equipment as you can to like heavy duty ass equipment, and you can go really, really, really far as the owner operator. But then the second you try to get off that job site and leave it, I'm not qualified to talk past that point. But
Can we talk about this for a little bit though? Because I got some thoughts.
Okay.
One of the challenges is with that, like that's not the only industry that has that, but that is an extreme case because the dingo is I don't know, like pushing $100,000. The crane truck for those situations are like $100,000 if it's used, right? The stump grinder is whatever, and a lot of times like they rent the bigger piece of equipment if you're an owner operator.
Mm-hmm.
But if you ever watch a manufacturing business, like a good manufacturer, if they have a piece of equipment, that thing is running 80% of the time. It has to be. In order for them to be profitable, usually it's like the 80-20 rule is the 80-20 rule for a reason. It's running 80% of the time, which is why a lot of manufacturing companies run a first shift and a second shift, and third shift is operating to wind the day down, and the back half of it is like sanitation or maintenance or whatever it is. We throw that out the door a lot of times in the service industry, but like to our detriment. When we have big capital assets like that, we should be doing the same thing. That thing needs to be running like 80% of the time. And so sometimes the challenges that those businesses have are they have all this equipment, and yeah, they can go pretty far, but they're super strapped with expensive assets. And those assets generally aren't operating all the time. And so their cash flow can struggle as a result of it. Now, because they can usually have a pretty big average job size, they can still bring in quite a bit of dough, but they have a hard time scaling because how the hell are you going to hire a guy that can use that crane truck, that can run that stump grinder, that can run the dingo thing, that can climb that tree, right? Like, you're trying to hire somebody that otherwise just might as well be a business owner. If they could do all that stuff, they would just run their own damn business, right? So now,
man, you're speaking some truth right now.
Dude, in that tree space, if you look at it, though, it tends to be a bunch of solopreneurs and a helper, right? It's the solopreneur that can go do everything, and then he'll hire a helper to do, like, the onesie-twosie stuff that's easier to train.
Yeah.
Or it's a $30 million business. There's a lot of $10 to $50 million tree care and tree removal businesses that are massive because they had enough to like scale those assets, right? In general, and this again, the tree care industry is an extreme case of this, but this happens in window cleaning and pressure washing, right? There's a lot of dudes that will do window cleaning and then they do pressure washing and then they do some, one of the funny things we tried to do was driveway sealing. Because we had like 2 months of slow time in the summer, like August and September was always slow for us. And we're like, we got downtime. We should do driveway sealing, right? Such a when you're smaller, you branch out into everything. And you can when it's like you and a helper. The problem is it causes you to buy all these assets that you can't possibly use all the time. And so it sucks all your cash flow dry. And you end up just being a stockyard of toys that you're not using all the time. A way smarter decision would be like, we're going to be the stump grinding kings of the North. And all we're going to do is stump grind. And I'm going to scale the shit out of stump grinding. And anytime any other tree care business needs a stump ground, we're going to be so good at it. And that's the only piece of equipment we're going to have. And we're going to have one of them. And then we're going to have two of them. And then 3, 4. And I can train the dummiest dummies to grind stumps. I can't train them to run the crane truck and do this and know how to cut that tree and do this and that. But I know I can train. I'm just talking on my ass here because I've never ground a stump in my life. But my point being is I could train that. If all I did was that, I could probably grow $1 million business in a couple of years just doing that, right?
Wow.
But if I tried to do all the things, sure, I could do all the things.
Dude, he ain't never going to do it. My buddy had a genius idea for a business.
What's that?
He ain't never going to do it, so I'm just going to say it because he done told me this shit a couple times 5, 6, 7 years ago.
Yeah, it's over. It's over.
Yeah. To be a service, my right foot's twitching, telling me to shut my mouth.
That's how you know?
Yeah, I've conditioned myself through neurolinguistic programming when to shut the hell up. Anyway.
So I shouldn't egg you on to tell us?
Well, okay, it's a Johnny on the spot. It's a basically for landscape and tree services and stuff that I'll just shut up right there.
But I think that's a thing,
you
right?
You can build relationships with hundreds of companies.
Yeah.
And it kind of like, I'll just stop. All right, keep going.
Yeah. But I mean, that's a real thing because so many of us get into it. And when we try to build it based on our skill set, we can do a lot of things. That's why we're a small business owner, right? We like it. Again, I don't like systems and processes. I like jumping around and doing this and doing that and breaking this and solving this problem. That's not scalable. How many people can go do that? Very few, right? So if you're in the tree care industry, you're going to have a really hard time finding the guy that can like climb that tree and then run that piece of equipment and then do this and you're going to pay him $20 an hour. Bullshit. He's just going to go start if he's that good, he's going to go start his own company. But you could hire some rock climbing guys to go do your tree work and you could hire somebody else to go do your stump grinding, right? And so part of our challenge as we scale a business like that, especially a capital intensive business, and we're just picking on tree care right now because we got into it, but it's such a capital intensive business for all these pieces of equipment. And so that's why you see this huge gap between, there's some massive companies in that space, like some massive companies in that space. You can get huge in that space and then the assets aren't really that heavy on your balance sheet, but it's really hard to be an average size company in that space and do everything. You don't have the scale to do it. You're better off like picking the things in that space that you're going to be really good at. And I'm just talking about this from my experience in maid service and window cleaning and pressure washing. We spread ourselves thin. Like I said, we tried to do blacktop sealing. Stupid. We tried to have businesses across the country doing less than $1 million. Stupid. Like, we spread ourselves thin in so many dumbass ways. In hindsight, if we just literally would have been like, all we're going to do is clean windows and we're only going to do it in Minneapolis and we're only going to do these size of houses and that's it, I bet we'd have a $10 million window cleaning business right now. Instead, we had $3 million worth of problems spread out across 8 locations across the country. It's like, tree care is no different. We, as a business owner, when it's just us and we're small, we have the luxury of we can do a lot of things. As we start scaling it, we start to realize, like, oh shit, I can't hire a person to do all that. I can't hire an office person to know that stump grinding happens like this. But when we do this type of tree, we have to do it this way. And that type of tree might have this disease. And so here's the thing that you need to know, right?
I got a friend who's a super high level arborist, and he has to sit down himself and personally write up these quotes.
I bet.
Because he's describing, this Colorado spruce has cytosper canker, and it has, rhizosphere or needlecast disease, or this. He's going on and he's talking about the remediation, and then he's talking about the girdled root and basically how we're going to have to do a tree injection with this amount of this. And it's like, so he has to charge, I don't know what it is now, but it's probably like a $2,200 minimum to be able to even step foot on a job site.
Yeah.
Because of all that stuff. And there's stuff I just don't want to say. I will say this. So being a owner, operator, or solopreneur, whatever you call it, I've done tree trimming, shaping, thinning, pruning, sculpting, elevating. There's people that would say, you should never sculpt a tree. You're gonna go. We've done, like, I've probably done 1,500 removals and probably trimmed 10,000 trees. And I've learned a lot of stuff, and I've been around. It's stuff I don't share on YouTube, so I'm not an expert. We've fucking removed some monster trees, bro. Stuff that, like, with cranes, spider lifts, 100-footers, bro. And what I learned was I don't do any of that shit anymore. We just do ornamental tree trimming. Small little trees you can reach with a step ladder and shit that the customer can't reach, that I can charge $250 or $350 per tree.
Yep.
And then we can get in and out within a few hours and do these trees because it's simple and it's predictable. It's not crazy dangerous. It doesn't require some high level workers' comp. And then I can train other guys to come in and prune them and do the stuff. And, and that way I'm not handcuffed to my service business, because I don't want to grow a monster tree company. Some dudes might, but they think that, sorry, you'll talk about the purgatories of scaling, bro. What I wanted to say and narrow it down to,
we're just setting it up. We're just setting it all up.
If you're going to do something, go after something you're passionate about in your heart, and you can see yourself doing this 10 years from now. Even if you change the role in the business, do what you're passionate about. Because if you're just chasing money, or you see some other guy who's making a bunch of money doing big tree work, and he's got these big trucks and a lift and a boom, he must be doing so good. Well, make sure that's really what you actually want to do.
Yep.
Go mess around with that for a little bit before you go, because you might realize you hate it, or you might realize you love it. But
dude, we're gonna get into that big time on the purgatories of scaling thing. But to set that up before we get into that, we start in the service industry generally because we're like, oh, I'm doing a thing. I like doing this thing. I'm good at doing this thing. People pay me to do this thing. I'll start a business doing this thing. I don't care. Like, I mowed lawns right through like middle school and high school. I've run a window cleaning business. I've run a maid service business. I've started from scratch. I am a bookkeeper technician. Like, I don't dislike doing that. I'll sit and screw around in QuickBooks. Like, at some point I'll get bored of it. I can't do it all day, every single day, forever. But I will, like, I enjoy that sort of work. I like being outside working with my hands. I like working on people's finances, all that sort of thing. What happens is, that's what enters us into a service business. And bookkeeping is just a service business. I'm just not going to people's houses to do it, right? Or to their business to do it. I just do it digitally. Recruiting is the same way. Marketing is the same way. Landscaping is the same way. They're all service businesses. what happens is we're good at a thing. We start doing it. We grow a business doing it. Eventually, we start hiring people to help us. And we used to be a landscaper. Now we're a team lead. Now we're a manager. Eventually, we're a general manager. Eventually, we're a salesperson. Some point, we're a COO. And some point, we're a CEO. And all those jobs are totally different. And the skill set of being a good CEO has nothing to do with bookkeeping, has nothing to do with landscaping, has nothing to do with window cleaning, whatever the hell our business is that we got into. If we're going to scale it, the skill set that got us started in our business is almost useless.
Wow.
And so we'll talk about that when we get into the purgatories, but as you scale a business, like, make sure the business you're growing has a job that you want in it. Right? The business you started had a job that you wanted. Maybe you don't want that job forever, and so you've got your sights set on something different. But I think that's a staple of that whole conversation is just your job changes immensely as you grow a business. And it has to for the sake of the business. Now, the cool thing is you grow a business, there's a whole lot of jobs in it. So if you like being on the truck, you don't have to get off the truck. You can hire all the office stuff. You could hire a CEO, and you can still be out on the truck. One of my favorite podcasts, I find myself listening to podcasts since I'm a show host. When I listen to a podcast, I'm like listening to be a better podcaster and a show host. Like, I don't listen to their content as much. I'm just like, oh, how do they introduce this guest? How do they make this boring topic entertaining? One of my favorite ones, not that it's a boring topic to me, but might be to others, is the Meat Eater podcast with Steve Rinella. Outdoorsy podcast. They have a lot of scientists on and different state agencies on and stuff like that. Every once in a while, they'll tell a hunting or fishing story. But one of the things that they do on there all the time is they'll bring, let me back up. They bring a guest on, right? Steve Rinella is the show host. Steve started it. Like, it's his business. He's not the CEO of it. They hired a CEO so that he can just be the show host. He hosts when they do like a live hunting episode, and they'll bring filmers out and whatever, and they'll film an adventure and a hunt or whatever. And he's the host of the podcast, and he brings in other talent, but he's not the CEO of that business, right? He realized his skill set isn't to be the CEO of a business. Being a CEO is boring as hell. It's dry. It's lame.
Oh my God.
The
shit
shit
gave me the biggest epiphany ever. Keep going, bro.
Yeah, but just like the shit you deal with when you're a CEO is not fun. It's not day-to-day problem-solving stuff. It's like legal, bureaucratic nonsense the bigger your business gets. So is that what you want to do? Like, not to say stop growing a business because you don't want to be a CEO, but if you like being out in the field in your business, don't hire somebody else to be out in the field and you go do sales. If you like to be out in the field, go hire somebody else to go do sales. Go hire somebody else to answer the phone. Go hire somebody else to be the CEO, and you do that's the beauty of owning the damn business that you operate. You get to own it. You get the benefit of being an owner. You also get to choose which job in there you like, and it doesn't have to be the CEO role. Like, being a CEO is boring as hell. That's not a fun job. It's lame. It's dull. It's lonely. Maybe you want to do that. Maybe you don't. But it's your business, so you get to choose which job you want.
Wow. Choose the role that you play in your business and then hire the other roles.
Who, not how.
Empower by Dan Sullivan.
Yeah.
All right, what else for this podcast? You got anything else?
I think we covered it. We got the 5 financial fundamentals in there. We got the what a bookkeeper does. We got best damn bookkeeping. We'll talk. We got to do future episodes here. We got to talk about group interviews, and that's life changing. If you're going to hire anybody ever, you have to listen to that. That is going to be its own episode because
you know what I'm going to do. I'm going to do something special for you guys. I'm going to put out these 2 episodes back to back.
Bam.
Yeah, it's going to be part 1 and part 2, or very, very close to each other. So if you're on Apple or Spotify and you're scrolling on the Untrapped podcast, then check this out. Also, if you would like to have this for your podcast, you can have all rights to it as well, by chance, if you want any of the content and you want to post it on your stuff.
Yeah. Spread the love.
Absolutely, because I want everybody to hear this. So we're going to do that tomorrow. Dan's in town from Minnesota. We're going to go get some dinner, hang out, talk business, and we're going to be right back, and we're going to do this again. Bro.
Yeah, dude. We're just getting started, baby.
When you talk, man, there's things that pop up that I want to say, and if I just relax and you address them, you know how to come to a close and wrap up and put the bow tie on it. You know how to, like, when you open loops, you're aware of the loop that you open, and you know how to conversationally close it and get back and keep the main thing, and the point.
I always wonder, though.
You're good, bro.
Like, you know how you hear other people talk and you know they said something they didn't mean to say? Like, they said a word that was different, that didn't make any sense in, like, the phrase that they said, and you know that they meant a different word, but their brain just spit out the wrong word.
Okay.
You know what I'm talking about?
I do.
Right? And then you're like, that causes you to reflect, to think, I wonder how often I do that. Because that person had no idea of what they actually said. And I could call them out for it and be like, you said this, but did you mean that? And they would argue till their death unless you proved it to them that they said what they thought they said versus what they actually said. Right?
Well, I have selective hearing. My wife will tell me some shit, and I'm like, you didn't. She's like, I swear to God. And then,
well, naturally, that's called being married.
Yeah, I'm sorry. yeah.
But I always wonder. So, like, I know I talk to people and they say a thing and I know it's not what they meant and they meant to say this, and, like, if you addressed it with them, they'd be like, that's not what I said. And I'd be like, well, I wasn't filming it, but that's what you said. I know it's not what you meant.
There's a book, I said this, you heard this, or you said this, I heard that.
Yeah.
Dude, if somebody is speaking on a podcast or on a stage or some platform and they say one little weird thing or anything, I'm that dude. If I don't care if it's a 4-day long event and then and the sun went up and down and thousands of people and things and blah, 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 and people had lunch and went to bed and woke up and all different things and it rained, and 4 days later, if there's a long-ass line and we get to meet that guy, you know, it's been 96 hours. I will say, hey, what did you mean way back at 27 seconds when that one little tiny microscopic thing came out of your mouth and you said, oh, never mind that one thing. What did you mean?
Yeah, what was that?
Dude, that'll stick like a splinter.
Yeah, I gotta know. I gotta know what that was.
And it's so becoming aware of stuff like that and being conscious about what you talk about in the seeding and threading. So sometimes you could say something called, it's proprietary language. So you say Dan's 5
finance fundamentals.
Okay, 5 finance fundamentals, and we're going to get to that in a little bit. People are like, well, I got to know what they are.
Yeah.
Because you don't hear people talk like that often. And you must have put a lot of thought into this. You are the home service CFO. This is your specialty and your obsession, and you make it fun. So if you've come up with 5 finance fundamentals, we got to know what they are. Oh, my God.
And when you get to 4, you're like, well, now I got to know what the 5th one is.
Yes.
You can't just stop at 4.
And you deliver on them, and you know what they are. So it's awesome, man.
So, but now I got to close that loop because, like you said, I started a loop, and I got to close it. Okay. So you were talking about closed loops, and I'm well aware that I'm a very tangential speaker. Just like I don't like systems and processes, when I do my podcast, no script. I mean, kind of like this. Like, I got some thoughts.
One other thing. You come with all the points, but in between the main points, you'll loosen and we'll just kind of banter and shoot the shit and then get right back on. It's like, it feels scripted almost at the point of your awareness. All right, keep going.
It's in here, right? Which like our businesses often are too.
Yeah.
Right? Even if we don't have it all documented, like we know how it's supposed to be. It's all right up in here, right? This tribal knowledge thing we got going on. But just like you, again, like I observe people that say a thing, and I know that's not what they meant, but I also know that if I addressed it, they'd be like, that's not what I said. I also am well aware that sometimes I must open loops that I don't close. And I'm like, just like I know there's got to be times where I probably said something different than what I meant to say, but nobody told me, and so I'm unaware of it, right? Like I watch other people do it. It must happen to me. I can't be flawless. They don't know what happened to them. So it's got to happen to me too.
Yeah.
I just would never know it unless you told me, like, Dan, like, I think what you meant was this, but what you said with this. And then I'd be like, bullshit, Keith, prove it. That's not what I said. And then you'd be like, I can prove it because I got the technology here. And here, let's.
No, you've been very good about what loops you open and close. And that's why I said my right foot's twitching, because I've conditioned myself a lot more than I used to be careful of. If I think of something, like I get excited and I think about this other thing.
Oh, yeah.
Shut up, Keith. Just stay on the main thing. Because I was on a panel at the Equip Expo last week with Brian Fullerton and Naylor Taliaferro and all these guys, and they know when Kalfas starts talking, you got to keep him on a tight leash, bro.
Yeah.
Because I'll go off into neuro-linguistic programming and hypnotherapy, and some people in the audience like that shit when I talk like that.
Yeah.
But there's a lot of other people that are like, oh, all right, dude.
Here he goes.
And so there's some part of my ego. So I've learned this when you're talking to customers. Just make it all about them.
Mm-hmm.
And how quick can we make this customer super happy for real so we can get the check and move on to the next customer? Because everything else beyond that is just, it's not really value added if it's not making them happy. Nobody cares, you know?
Yep. Nobody cares.
Bro.
They just want the experience.
How can everybody find you again right now?
Go check out. Actually, by the time this podcast launches, I got to get my website up. I've been so busy helping clients, I haven't built my new website. But it will be, and the URL already exists, bestdamnbookkeeping.com. Dam spelled D-A-M-N. But I also own the domain for Best Dan Bookkeeping in case you type that in. Or if you don't like the swears, go with Best Dan Bookkeeping. Or you can go to calendly.com/Best Dan Bookkeeping too, and that just goes right to my schedule. You can book time with me to do a demo, nerd out for 15 minutes on your business, whatever you want to do.
Calendly.com/bestdamnbookkeeping.
Yeah.
To book
some time, nerd out on your business.
If you are looking seriously to get help with your bookkeeping and to sign up as a client and you want to know how this can serve your business, right?
Yeah, there's a link on there for like an hour-long demo. And people like bypass that and they try to book 15 minutes. And I'm just like, no, you got to book the hour. A, you might be able to tell, but I talk a lot. B, your business is more complex than you think. And if we're going to get it right, we got to spend some time on it. There's no shortcut. There's things I need to know about you, things you need to know about me and how we do things. And so we're not dicking around. We're going to dive in. It's important.
Some people might be like, but before I do that, I don't want to waste your time, Dan. How much is bookkeeping per month? You know, they said they can have some type of, they don't say, how much is bookkeeping? It's how much is this thing? Like, what is the range of bookkeeping costs?
The answer is always, it depends. Because I price based on transactions and number of bank accounts. Like, how much activity do you have going on? I've had a guy doing $1 million in revenue, and his price was $160 a month. I had somebody doing $300,000 in revenue, and their price was over $400 a month.
Mm-hmm.
They were just super inefficient. They were swiping a card for every $2 on the planet. I don't know what they were doing. But so
my bookkeeping bill is pretty high because I have so many bank accounts and so much shit going on and so many different
the more complex it is, the more work there is to do.
Yeah.
And so it's not like a one size fits all. Like the process, I'll say there's a process, but every business is unique, right? So the bookkeeping has to be unique for that business. We have ways to organize it, but the pricing is going to address the uniquenesses of that business and what it takes to do a good job for that business. I will say it starts at $147 a month, and it just goes up in $25 increments from there based on how complex it is. And part of the reason why I spend
there's an initial onboarding fee to sort through all of it and get it all.
So there's a $500 setup fee to like get it all built out the right way and do the chart of account stuff, the right organization, the balance sheet stuff. If there's, I will say, if somebody says, hey, I heard you on Keith's podcast, they always get half off just for the Kalfas love. So it's like $247 setup fee for them. There might be an onboarding, like a historical fee. There usually is, because most people that come to me come and they're like, my books are a disaster. And most of the time they're not as bad as they think. But like I'm working on one right now that we're going back to the start of 2022. It's like there's a lot of historical work. So whenever we're doing historical stuff, I just bill it hourly. I bill it at $87 an hour. I mean, it's hilariously just like window cleaning or maid service or lawn care or landscaping. Like the rates are about the same. Like the business model is hilariously similar. So I bill that time at $87 an hour for like specialized technician labor to go back in time, clean stuff up, correct stuff, whatever it needs. And again, it's like Every business is different. How far back do we need to go? How screwed up do we need to undo stuff, redo stuff, all that? So we do hourly stuff until it's caught up, cleaned up, reconciled. You could eat off of it, type of cleaned up balance sheet, P&L. Then we send our first P&L analysis. And this is a new thing that I'm doing in the new business. When we send a P&L report, we send an analysis with it. So it's not just like here's your P&L, which if you're not used to looking at a P&L, you're just like, what is I don't know how to read this scoreboard, right? Like there's a financial way that it's laid out. And if it's the first one you've ever seen, you're like, and so, it's like a bunch of words you don't recognize and a bunch of numbers in a weird organization. And you tend to look at the top line to see like how much money came in and the bottom line to see how much money is left. And so now when we send it, we send like a 2 to 5 minute video talking about here's what's going on in this and here's what's working and here's what's not working and here's why it says what it says. So a little bit of flavor for a little context, little help to the business owner, little finance nuggets.
Thank you. In my program, the Business Money, it was the Business Money Basics, and now we've upgraded it to Business Money Blueprint. You actually came in for like an hour, and it's my private course.
Yeah.
And you showed how to read a P&L statement and all this stuff. If you guys ever see that program, I don't even think you can get it on my website right now. It's special. Grab it. If you don't hire Dan, go learn that, and then so it'll give you the confidence so then you can go hire Dan. You know what I'm saying? Dan is the man. I totally trust him with my books and bookkeeping and financial data. He has impacted my entire life to the point where I was in tears. That's how much Dan means to me when it comes to, because having my act together financially, and probably the same for you, is one of the most critical things, at least breathing air on this planet. So you can be a provider and be a caretaker. So thanks so much for being on my show, Dan. We'll be back again tomorrow with we
got to do the group interview and the purgatories of scaling. So we got like 2 deep topics tomorrow.
And if you're watching this on the video, I'll put that link to that video below here. And if you're watching that video, I'll put the link to this video below there.
But bam, circular.
Thanks, Dan. Thanks for being on my show, buddy.
Hell yeah,
Thank
Keith.
you, everybody, for watching the Untrapped podcast. See you on the next show.